Good morning. This is the video newsletter for buysellshort.net for Sunday, April 18th. Little chink in the market's armor there on Friday. The reason for the sell-off, of course, was the government SEC issuing fraud charges against Goldman Sachs for the way they did a CDO deal a couple of years ago. And Goldman Sachs plunged, all the other banks plunged. We had commodities sell off, and traders just get really risk averse very, very quickly on Friday. Now, granted, the sell off that we saw on Friday, down 100 plus points, really wasn't that much. I mean, if you looked at the business media and listened to how traders talking, it was the end of the world on Friday. We're still above 11K. The Goldman Sachs issue, we'll actually go into it a little bit more if we've got time at the end of the video, is not that big a deal, in my opinion. I mean, it's a big deal, but not the way the market's making it out to be. However, they could use it as an excuse to bring this much-needed retrace that we've been waiting for weeks in this market to have happen. Goldman Sachs, they report earnings this week, Tuesday, I believe. Likely going to knock the cover off the ball, so it's going to be interesting to see how the market digests that. But let's jump into the stock charts here, and then we can go back to the Goldman Sachs issue at the end of the video. Here, looking at the 15-minute chart, you can see we fell out of that last bearish rising wedge that was in place. You can see that between the dotted lines, but we've just fallen back into the other wedge that's been in place since late March. And we're still trading at the upper level of that with downside risk to the 10,900 level. We'll get a better idea on the daily chart. Here on the daily chart, you can see we're still sitting above the 20-day exponential, which we have not touched in about 7-8 weeks. Breakdown would be the 10,900 level. That's the 20-day exponential, 10,919. 38% Fibonacci retracement would take us down to the 10,650 level on a break of this area. And that's also pretty close to the 50-day moving average, which would be a magnet if this sell-off is able to get some steam. Looking at the sell-off that we see here on the Dow, what we'd be looking for as confirmation that we are in fact in the midst of a retrace would be similar action to what we saw in January. We had a down day, then another down day. We had our first one here. So if we see a dip below the 20-day exponential tomorrow, then all bets are off. We go back to a very high cash stance, and we wait for the market to do its retrace. If we see some greenage tomorrow, then it's going to be more of the same, more frustrated shorts. Speculative money might pull back a little bit. But the action we saw on Friday is a warning signal. Big spike in sell-off volume, although we've seen that happen previously during this rally. Essentially what I'm saying is a break of the 10,920 area and the retrace is on. Simple as that. Looking at the SMH, if you are looking for some short plays here, the SMH is an index that loves to trade next to its 20-day exponential. That's at 2860 right now. So if you're looking for a short play here, you're looking at $1 potential plus on the downside here, which stops at 3054. Again, if there is a bounce on the SMH tomorrow and you're looking for some way to cover your long exposure in the market, a short of the SMH could give you a nice little 5 to 8% move and some portfolio protection here on the near term. US dollar, we haven't mentioned this recently, but the dollar definitely looks like it's on a bounce move. Setup on the chart looks exactly like what we saw in early March when the dollar went on a nice little 5% pop. We've got RSI bouncing off support, stochastic, same thing here. And the bounce in the dollar might continue the sell-off that we've seen in commodities. Big down move on commodities on Friday, gold down 20 plus, oil down 2 plus. Usually when you see the commodity sell off like they've sold off, it typically is an indication that the market's getting ready to reverse because so much money is leveraged into the commodities that when the funds look to raise cash, they slam the commodities really, really quick. But for now, let's jump into some stock plays, and then we'll go back to the Goldman Sachs market issue. ICOP trading alert from Wednesday. Our other trading alert on Wednesday, ALAN, 100% move from us, 26 to 59 cents. ICOP is setting up for a similar situation going into tomorrow. We should see a move to the 200-day moving average, so we're looking for a similar move that we saw on Allen in ICOP, move to the 45-cent area. CHIO is a chart to keep an eye on tomorrow, trying to break out exactly like it did back in early March. This is when the stock broke out, ended up going up 80% in the matter of a couple of days. Nice little breakout here. If you're playing this stock, it should not dip below 60 cents. So your stops would be 59, 60 cents here. Target 75 to 95 cents on this one. RSI breaking up through 50. You can see volume is doing the exact same thing it did back in early March. So we'd look for a very big volume spike on this one tomorrow. Positive MACD cross. Downtrend line break in stochastics and unbounced volume showing that the money flow is definitely coming in here. So ICOP and CHIO look very, very good for movement tomorrow, despite what the market does, even though we're probably looking at a pop in the market on the open tomorrow, in my opinion. EGT, this is one of our small cap penny plays. Again, last time we played this one, we got a big move on it from the 22 to 43 cent area. Looking for similar action here with support at 23.5 cents. First target 30 to 32 cents on this one. CRXX, we have the AARCR Biotech Cancer Conference this weekend going into Monday. These guys are presenting. All we're looking for is a press release, and we see an easy move to the $1.50 area on this one with stops at $1.30 or no news tomorrow. If we don't get any news tomorrow, then we'll probably look to exit this one flat. But I'm thinking this one's going to get a nice little pop. They did a shelf filing. Usually when you see companies do that before conferences, they're getting ready to pump out some press releases. So we'll be looking for some press on this one tomorrow. SNSS, again, another cancer play. CYCC, this is a cancer stock. They're presenting a bunch of stuff at this conference this weekend. Whenever that stock moves, SNSS also gets nice pop. So we'll be looking for a bounce off the 50-day moving average tomorrow. And any news would be looking for $1.10 to $1.18 here. WAVE. Over the last couple of days, we've gotten some nice spikes to the 50-cent area. This one was ready to pop on Friday before the market started its sell-off. Any greenage in the market tomorrow, we'll definitely see this one bounce back. First target, 55 to 60 cents here. ADX, very, very strong. On-balance volume strong. We've got a breakout looming in stochastics here, and things look pretty good for this stock in the near term. WSTL, as I've mentioned in the trading alert and in the chat room, this is one of the best tech stock values under $2 in my opinion. They have lots of cash on the balance sheet, no debt, cash flow positive, earnings, tech stock, play on the broadband rollout, just absolutely dirt cheap here. Stops $1.40. We got our breakout to $1.55 on Friday, and then again, the market sort of took the knees out from a lot of stocks. Still love the setup. Volume was very good. Positive MACD cross. Stochastics looking good. ADX looks good. Any greenage on the market, and we see this one break out nicely tomorrow. Now, if you're looking for some short plays, just in case this market does in fact break down, would be looking at these large tech stocks that have moved really, really big recently. You've got Amazon with a double top in place at $1.45. Loves to trade to its 20-day exponential. You know your stops are going to be on this one. BIDU, just a bloated turd in my opinion. The fact that this one didn't plunge on Friday is crazy. But if we see an extended sell-off in the market, this stock is going to the 50-day moving average. So 10% downside here. Confirmation of a break would be a break of the 20-day exponential that is at 608. Now the bank charts all have similar chart setups here, big steep drops on them. You can look to short these ones like JP Morgan, Bank of America, BAC, just off the Goldman action. But let's see how the market reacts tomorrow. If we see a bounce in all of these stocks tomorrow, then the contagion that everyone's been talking about is not going to spread, at least yet. As for the Goldman issue, I really don't think they're going to lose any of these cases, and the reason being the CDO market is a scam market anyway. Both parties in CDOs know exactly what they're getting into. It's going to be very hard to prove any sort of fraud cases, especially when it comes to sophisticated institutions like the ones that deal or dealt in these things. Anyway, we've got some fear in the market. Shorts are probably going to use it to punish stocks, and we'll see how the market acts tomorrow. But going into tomorrow, ICOP, CHIO, of course, our EGT, and then really looking for a nice bounce back in Wave and WSTL. That's it for the video. I will see you guys in the chat room tomorrow. Goodbye.